the Securities and Exchange Commission is proposing new rules that would guide intending issuers of bonds. This is in a move to ensure that Nigeria and Nigerians benefit from the fast-growing global social bonds market, currently estimated at $85 billion. All right, let's talk more about this and other market developments with Akintoye Oyelakun, investment analyst at Codros Asset Management Limited. Thank you very much, Akintoye, for joining us.
Thank you very much for having me.
So let's understand what social bond is all about and why it's important for Nigeria to key into it.
Yeah, so social bond is a very critical bond in today's society, given the impact of COVID-19 around the world. So what most economists are doing now is to use social bond to effect change in environment or societies where people have the lack of access to basic social amenities. How this works is that the federal government, for instance, may want to resolve some social infrastructure gap in some communities. And what the federal government would do is to appoint an intermediary. This intermediary will then look for investors, social impact investors. Then they will gather these funds together and then disburse it to non-profit social service providers. So these social service providers are already into that business before, but now they're able to scale up because of the access to capital. They go to these communities and then they implement these social projects, which could be around maybe health facilities or maybe access to waters or any other social project. So once this social project is completed, there's going to be an independent advisor. So this advisor is going to assess how efficient these projects have been in terms of solving the problems that are faced in these communities. So once he's able to assess that these projects are able to achieve the intended use, then the advisor is going to inform the government, and then the government will have to settle the investors. But one factor that distinguishes it from other products is that unlike the normal bonds that we have, normal FGM bonds, this does not put any financial risk on the government in the sense that the government will only have to settle investors if the projects have been done efficiently to help to resolve the social infrastructure gap.
All right, Akintoye, so the SEC's new rule states that qualifying projects must promote either affordable basic infrastructure, including clean drinking water, sewers, sanitation, transport, and energy, among others. What is your view on this proposal?
Well, looking at the level of poverty in Nigeria, and some states in Nigeria are not able to have access to these basic amenities like access to water, access to healthcare system. This will definitely help to support the government in that area. So the government will be able to see more funds, especially for those social impact investors, those investors who are looking at investing in such instrument that will help them to solve social problems in the society. So it's a very good one for Nigeria if it is well implemented.
The developments in the market. Now, despite the concerns in the Asian market as regards COVID-19 cases worsening, the OPEC Plus remained optimistic about the demand outlook for the oil market. Now, in its last meeting held on the 1st of June, the members agreed to increase output by about 2 million barrels per day from May to July. Now, from an investment point of view, what does this mean for Nigeria?
Yes, it's a very good move by OPEC for the fact that OPEC has continued to support the balance of the oil market since 2020. And given the level of demand that we have seen across the world due to the rate of economic reopening and COVID-19 vaccination, demand is growing. And, oil prices have strengthened significantly, even above $70 per barrel. So this actually creates room for the cartel to start to ease production. This is what they are doing. Although looking at the output that Nigeria currently does in terms of crude oil production, it is still below the 1.8 million budgeted. While if you look at the price at $71 per barrel for Brent, it is far above the $48 benchmark for the budget. So what this implies is that there's going to be more funds compared to what we had in 2020. There's going to be more funds for the government to meet with its obligations, and also in terms of FX inflows, as we know that we are having FX illiquidity challenges in Nigeria. This could help to also resolve that, as the CBN could have access to more FX to defend the naira across the FX windows.
All right, so the World Bank has recently raised its growth projection in Nigeria to 1.8%, up from its initial 1.1% outlook for 2021. The revision was on the back of increasing oil demand, structural reforms, and market-based flexible exchange rate management. Is this in line with CODRIS's outlook for the year?
Well, if you look at it in terms of expecting a growth in GDP, it is in line with our view. We also expect to see growth in 2021. However, if you talk about the level of optimism, we are more optimistic than the World Bank, given the fact that we expect the reopening of the economy to support the resilience of the non-oil sector. Not to also forget the fact that we had a weak base in 2020. So this will also support the rate of growth that we see in the non-oil sector. And for the oil sector, across the world, we are seeing demand strengthening due to rate of vaccinations and economic activities that we're seeing. So this will definitely support oil production, increase in oil production, and compared to what we saw in 2020, it's going to be a positive year for the oil sector. So on the back of this, we are projecting a 2.63% year-on-year growth for full year. So our outlook for the economy is more in line with that of the IMF than the World Bank.
Now, another interesting news there is, the central bank's decision to cut down on exchange rate windows. This move strengthens the convergence towards a unified exchange rate as the Apex Bank reduced the operating windows from 7 to 4. Could this move put an end to the FX liquidity or illiquidity challenges?
Yes, so the move by the central bank again shows its intention to unify exchange rates, and it's very good for the FX market, as the CBN will be able to focus more on the smaller FX segment, as we see improvement in the oil sector in terms of demand for oil, and then if prices remain relatively stronger than 2020 levels, this will provide more FX for the CBN to be able to defend the naira across this window. So in that sense, it is very positive for Nigeria. However, when you talk about the illiquidity challenges of FX, it will depend largely on how much we are able to supply across this FX windows. How much demand is the CBN able to meet across this FX window? These are the things that are going to shape the stability of naira and the availability of dollar in the country.
All right, let's look at the markets now. The domestic equities market has been bullish so far this week, despite taking off on a bearish note. Investors' optimism seems to have been reignited, with the all-share index advancing in the last 3 days. What can be attributed to this turnaround? And is this, the bearish sentiment, is it over?
Yes, so for the equities market, like you rightly pointed out, although the equities market opened on a negative note, we have seen buying interest on Tuesday and on Wednesday. And the major driver of this is, at the previous T-bills auction, we saw the long end of the primary market auction, there was a moderation in the stop rate, to 9.65%. So this kind of gave a kind of sentiment to investors that yields at the treasury bill segment could have peaked, or at the money market could have peaked, and then looking at the fact that we are approaching the half-year earnings season, some investors are already looking into fundamentally sound stocks that have suffered significant sell-offs during the year due to the increasing yield environment. So investors are taking position in fundamentally sound stocks ahead of the earnings season in H1 2021. So these are the likely reason why we have been seeing this positive gains, positive performance for the domestic bourse of recent. And we expect it to continue. Although, talking about the very sentiment, it might not be over yet. Investors will still continue to monitor the primary market auctions and also macroeconomic conditions, to determine whether or not there's still a possibility that yields will sustain an upward trend. And, depending on this will shape how the financial market performance is going to be for the rest of the year.
Okay, now the sentiment in the fixed income market has been, flattish since the beginning of the week, with many investors anticipating, of course, the direction of the yield at the Treasury bills auction, following the outcome of the primary market auction, which you did mention. Now, the global markets, not just our market, are all focused on U.S. inflation data, which is, of course, expected to come out today. What are the risk of or risk on do you see there for the Nigerian market?
Yes, so basically for the fixed income market, domestic fixed income market, like I mentioned, we are seeing a flattish performance for the bonds market and for the treasury-based market. While for the OMO segment, we are seeing a lot of buying interest, and the major driver has been the fact that investors were anticipating what would happen at the auction, which was held yesterday. So following the outcome of the auction, we saw another moderation in the stop rate at the long end of the curve, which implies that investors will now start to, strengthen their belief that yields at the Treasury bills auction or at the money market have reached their peak level. So what this will mean is that we could now start to see some level of buying interest in the market. However, for the US inflation, if inflation numbers print as expected for the US Fed, what would happen is that we are going to see a reduction in the economic stimulus. We could see a reduction in the asset buyback program, which is currently in place in order to reduce the inflationary pressure. However, if inflation numbers still remain weak, below what the Fed is expecting, we are still going to see sustained support for the U.S. economy.
All right, we'll keep tracking those numbers when they come out today. All right, Mr. Akintoye Ilakun, investment analyst, Cordros Asset Management. Thank you so much for your time on the program.
It's my pleasure. Thank you.
Thank you. All right.